So, what is long-term investing? How does it work? Why is it important? Is it really for you? All this will be answered. Let's discuss. Hey everyone, and welcome to the world of investing. Zach here. I'm here to share my knowledge in long-term investing and trading in general. If you haven't already subscribed, don't miss out on the golden nuggets I'm about to share throughout my videos in investing, trading, the right track to building wealth. So, what is long-term investing? In simple words, long-term investing is a strategy where you buy and hold investments for an extended period of time with the goal of generating wealth over the long period of time. This can include stocks, bonds, mutual funds, and other investment vehicles. I personally invest in stocks, good companies, and I invest in a safe manner. I don't invest in penny stocks, hoping it will make me a millionaire one day. That's not me. To start long-term investing, you will need a brokerage account with a broker that provides investing platform so you can execute investments and keep track of your positions. Most banks actually have investment platforms. And usually investors, they are in long-term investments. They don't watch a lot for commission fees, even though I recommend that you do. Or at least I do. It still adds up. Long-term investing involves a few key principles. Principle number one, good education, is to know a good amount in fundamental analysis and a small amount in technical. If you want to catch an investment with a sale price. But some investors don't even really care a lot about technical, since their intention is to hold that investment for 10 to 20 and even more years. For me, I usually take out profits. I don't keep them that long. I take out profits. I keep some, and I take out profits and I invest them somewhere else. That's me. Principle number two, diversification. Diversification is the practice of investing in a variety of different assets, such as stocks, commodities, bonds, and mutual funds, by spreading your investments across assets, classes, and industries. You can reduce your risk overall and potentially maximize your returns. Remember, we do not put all the eggs in one basket. I personally invest in stocks and all different sectors. Principle number three, compound dividends. Compound dividends is the concept of earning dividends on your investments. When you invest in a vehicle that pays dividends, you can reinvest those earnings and earn even more dividends and more over time. Principle number four, long-term investing requires patience and discipline. You need to be willing to ignore short-term market fluctuations and hold on to your investments for years or even decades. Principle number five, investing consistently. It's very important to keep adding up and feeding your long-term investment portfolio or investment account. Why is long-term investment important? Long-term investing can help you achieve your financial goals, whether it's saving for a retirement, buying a home, or paying for your children's education. By investing constantly over time and letting your investments grow, you can potentially accumulate a significant wealth. Now, there's some tips for long-term investing to keep in mind. Tip number one, start early. The earlier you start investing, the more time your investments have to grow. Even small accounts, if you invest over time in small accounts and keep feeding that account, okay, it makes a difference. Okay, there is a say, the best time to plant a tree was 10 years ago. The second best time to plant a tree is now. So start planting now and start investing in yourself now and get the good education. And if you don't know where and how, make sure you subscribe to this channel and turn on the notifications bell and learn from all the golden nuggets, information I will be providing regarding long-term investing as well as stock trading. Tip number 2, set realistic goals. Make sure you have a clear understanding of what you want to achieve. This will help you stay on track and avoid making impulsive decisions. Tip number 3, choose your investments carefully. Do your research and choose investments that align with your financial goals and risk tolerance. Consider factors like fees, performance, underlying assets of the investment. Tip number 4, stay the course. Don't get caught up in short-term market fluctuation or try to time the market exactly. Stay committed to your long-term strategy and keep investing consistently. Folks, I believe there is a recession coming around the corner, or a scare recession. I might be wrong. So if that happens, what does that mean? What does it mean for investors? It's shopping time. Now, as a citizen, no, I won't be happy. But as an investor, it comes to my advantage. And I can take advantage of that. Okay? Now, let me share a story. In March 2020, with all the COVID-19 pandemic going on, the market was crashing. Every company was going down 20, 25, 30, 50, even 60% down. I was scared to buy. I saw my coach and mentor was grabbing everything he can actually put their hands on. Of course, good companies. So I knew in my head it was the right thing to do. But I was scared. I encouraged myself, and I also bought with all the cash that I had set aside for long-term investing. Guess what? By August 2020, I actually tripled my account. Yes, it did involve some option contract, but when the market crashes, recession, depression, that is when you get your hands on great companies for great prices. So the final question is long-term investing for you? A quick answer. I'm not gonna go so far with that, okay? Absolutely yes. I believe everyone should have a long-term portfolio, building on it throughout the years for a better retirement or whatever the reason might be for you. And don't say I'm old or no more time. And let me tell you, I know a lot of people that started at the age of 50 and 60. Even I have a friend of mine at the age of 67. I love that. Now, there's something I want to emphasize that. I don't see the pension plans in Canada or United States, that's at least I know, they're not adding up inflation. People that were getting paid a certain amount 20 years ago or 15 years ago, they're still, the people that are retiring today, they're still getting paid the same amount. No one is considering inflation. With the amount that retirement that you get right now, you can't make a living. It can barely pay you your bills. Okay? And I don't see that fair. So if you think ahead, I think it's important for everybody, even for people that haven't retired yet. Start building your assets, start building your long-term portfolio. So when you retire, you can add those to your pension pay and old age pay. Okay? Because it's not enough. It's not enough what people are getting paid for pension here. So remember, long-term investing requires patience, discipline, and a long-term outlook. By following the principles of diversification, compound dividends, patience, and keeping these tips in mind, you can potentially build a significant wealth over time. Thanks for watching, and I'll see you in the next video. And if you have any questions, please leave them in the comments below. About long-term investing, anything that has to do with long-term investing, leave in the comments below and feel free to ask. Thank you.